um, almost the first thing people would ask is, "Oh, great, you do payroll as well." And I said, "Yeah, sure, okay, I'll I'll take this on, and how hard can it be?" And you open up this thing, and you've got 90
Right.
pages of clients to contend with, and nobody really knows how it works.
Welcome to the first episode of this podcast series. With me today, I have a really special guest, someone who's had a huge impact on the Australian payroll space. Garth, it's a pleasure to have you on this platform.
Thanks for having me. I appreciate you having me on.
Okay, so I'm pretty sure that most of the people who will be watching this, like podcast, will know who you are. But then, just for those few people who don't know you, can you have a short introduction?
Yeah, sure. Well, my name's Garth, as you said. I'm the CEO of PayCat. PayCat's a company in Australia that we specialize a lot in the SHADS and NDIS sector in payroll here, which is a sector that's actually got quite complicated payroll. So um, PayCat's very much about helping particularly complicated payroll platforms get compliant. We help them with outsourced payroll and self-managed payroll as well. So um, but yeah, we've got a very defined niche in that SHAD space, and we just help them with all compliance issues in that space. And I know we're going to talk about superannuation today, but it tends to be quite a complicated award that a lot of people
Yeah.
get wrong, but a lot of people have issues understanding and interpreting and doing it efficiently. So that's sort of where we come in.
Right. So, God, so when I reached out to you, I had mentioned that I want this conversation to be around Payday Super. But before we move to that, I had
Sure.
this one question that I really wanted to ask you. So,
Yeah.
you've been an auditor in big firms like PwC, right? Before
Yeah.
you moved on to payroll. There
Yeah.
must have been something that you saw in the market that made you realize, you know what, Australian businesses are not doing this right. I need to start my own
Yeah.
company and fix it. Probably
Yeah.
stats, but anything other than that?
For sure. It was a it's a strange market in Australia because there's a big gap in Australia where we really do need the payroll profession to be a recognized profession on its own. So
Right.
you find out here a lot of the companies it'll fall under HR and a lot of them will fall under finance. It's often in smaller business being handled by bookkeepers who
Mhm.
don't necessarily have award training as such. Like they might understand tax and superannuation quite well, but when it comes to award compliance, um, yeah, it's a very unique profession. It's sort of bringing in a lot of legal and process and systems integration these days and things like that. Just going back to a bit of my history. So I did external audit, a little bit of internal audit, but external audit, and we would do like very early on in my career, we would do a lot of like system reviews. So we like
Right.
my experience with payroll was more originally about how the payroll process is designed internally in an organization. For example, is there a different person that do we have separation duties? Is there a different person that might process payroll on payday to a person that can change an employee master file record or something like that?
Right.
And we would do transactional stuff. When it comes to award compliance, again, it's always been an area where you don't really know that it's wrong until the government comes in and does an audit,
Yeah.
and you find out you've been sleeping on this liability. And and in a lot of cases, it's big enough that, it could shut down a company or certainly significantly impact
Right.
it. So, um, we saw in more recent times it got criminalized. But to answer your question, it was very much listening to the clients early on about the problems they had that led me into payroll. But there's very much demand driven. Like when I
Mhm.
offered accountancy services, almost the first thing people would ask is, "Oh, great, you do payroll as well." And I said, "Yeah, sure, okay, I'll I'll take this on, and how hard
Right.
can it be?" And you open up this thing, and you've got 90
Yeah.
pages of clients to contend with, and nobody really knows how it works. And yeah, and it got as cloud computing become um, more prevalent, sort of around 2010, 2011, that's when I saw the opportunity where I'm like, you know what, all the stakeholders involved in a payroll process can log into one system. They can all bring in leave requests, timesheets, maintain their own employee master file, all that sort of thing. That
Yeah.
cloud computing sort of allowed that to happen easier.
Mm.
It was around that time I'm like, you know what, there's something here. So I got very invested in some of those early systems that were around, um, and built, you know, build an outsourced payroll practice off that. But yeah, as I said, it very much come from the demand for the clients. It's just everybody has the same pain point and nobody was solving.
Right. I mean, I kind of agree with in the sense that in Australia, it's a very tough compliance landscape.
Yeah.
And I think, like when I talk to businesses in Australia, their compliance demand kind of are restricted to statutory deductions, reporting, and things like that. But I think what you are doing and what we are also trying to do in the Australian market is kind of automate the other part of compliances, as
Yes.
in, you know, uh, create like embed the legal logic of compliances into the tech. And I think that is something that most of the payroll vendors are not doing right now. So yeah,
Yeah. Right.
that's a great space to kind of be in. That's what
For
I
sure.
believe. Moving to like addressing the big question, the Payday Super reforms. We are in Feb right now, roughly 5 months away from the reforms actually taking place.
Yeah.
You've worked, you work, like extensively with payroll systems. From your seat, do you think this is actually a payroll change that is happening, or is it more like a cash flow renovation with businesses?
Yeah. It's more the latter for sure. I think for inside of payroll systems, there's a tech challenge, and the tech challenge is um, because this changes. So just for the viewers that don't know, they're moving superannuation from something that's required to be paid quarterly in Australia. Bigger
Right.
companies maybe monthly, but it's quarterly in most cases, and then that they're moving that to be paid every payday. So if you pay the staff in Australia every week, from 1 July, you're going to have to pay your superannuation every week. And the
Yeah.
deadline for that's moved from sort of 28 days after the end of the quarter to 7 days after you've run your pay.
Right. Yeah.
So what that means is it sounds on paper it's just okay, send some cash off. How hard can it be? But in Australia, you've also got to send off a bunch of information that identifies that employee and how much super they've accrued and things like that. You have to send that to the fund. So the fund's got to receive enough information to identify that employee and apply the money that you've sent through to that particular employee's superannuation fund.
Right.
Sometimes that goes wrong. So sometimes they don't identify the employer properly and they send the money back and they send information back to tell us possibly what went wrong. And the
Yeah.
payroll administrators left to actually then deal um, with that issue themselves. So from a from a technical standpoint, the challenge for payroll software companies is to come up with a solution where you're getting that real-time interaction with super funds to make sure you're getting that
Right.
information come through so you can take action on it. But the most, um, I guess, the biggest impact on this being introduced certainly sits with the business owner who
Right.
now has a different cadence they've got to pay the superannuation, and that creates a different cash flow model that they've got to manage, and I'm sure we'll talk about it a little bit more, but I think that's going to be the biggest impact on the Australian economy, particularly when it initially gets introduced in July until people fall into that pattern.
You know what, like in the same line, I have a question for you which I want you to answer as a business owner and not as a payroll
Yeah.
expert. So for the longest time, most of the businesses in Australia have treated their super liabilities as working capital for 3 months,
Yeah.
right? And suddenly from July that is gone. So
Yeah.
how do you see, like, like business owners actually reacting to this? Are they prepared for this change? Are they doing something right now that is, like, that is going to help them in July,
Yeah.
or is it gonna come out of nowhere for them.
At a practical level, what's going to happen in July is you're going to get your bill for the last quarter. So,
Right.
the April to June quarter,
Yeah.
you're going to have to
Yeah.
pay. And then you're also going to have to start paying weekly. So there's going to
Mhm.
be a quarter between July, August, September this year
Yeah.
where you're paying a bill twice.
Right.
So what, everyone's raising awareness to their clients at the moment, or if they're not, they should be. Like accountants and software providers and
Mm.
things are raising awareness. And really what clients and what business owners should be doing at the moment is slowly changing their cash flow pattern so the impact isn't as big. Now, does this affect your profit outcome at the end of the year as a business owner? No, you're still paying the same amount of super.
Yeah.
The bill's not changing. What is changing is the timing of it, as you said. And actually, like ahead of this podcast, I actually ran a little calculation. I looked at one of my typical Chad's businesses and how much were they paying wages in Australia? So in a year, they might pay like $4 million. That might be you might have 50 to 70 staff somewhere around that range, right? And they're all on $40+ an hour usually.
Yeah.
So it's easy to get a $4 million wage bill. Now in Australia, we pay. Let's get my notes here. Sorry. In Australia, we pay like 12% superannuation at the moment.
Yeah.
So on that $4 million wage bill, my company has to find $480,000 in money to pay superannuation,
Yeah.
and that hasn't changed. That's
Yeah.
the same bill this year as what it's going to be next year. That's no issue. What has changed is how often I have to pay that.
Right.
If I go right back to when I was learning about how companies are structured early on in my career, taught about auditing, the game that people would play in finance teams is to say, well, if I've got a supplier that I can pay in 90 days time, I can set that money aside that I owe them in a interest bearing account,
Right.
earn a little bit of interest, and at the end of that 90 days, I can pay that bill, and I'm going to earn more interest in the year than if I had to pay them within 7 days. So there's always
Yeah.
an arm wrestle negotiation that happened between the supplier and the company to try to extend those trade terms out. And it still goes on to this day. Like
Mm.
if we take on a construction client, for example, they'll often always try to have an arm wrestle with me about how quickly they get
Well,
paid.
yeah.
Mining industry does it a lot too. Um, so it still goes on. But like just to highlight it, let's pretend that superannuation bill that we currently have 90-day terms on. Let's say that
Yeah.
they're a supplier that we've negotiated with, and that supplier's said, no, I'm not accepting 90-day terms anymore. I'm only accepting 7-day terms. What does that mean for that client that I just mentioned that has a $4 million wage bill? So let's say every quarter I had to set money aside for super. So every quarter, my super bill is going to come to $120,000. So the first month of the quarter, I'm going to save $40,000. The second month, $80,000, and the third month, 120. And at the end of that third month, I pay the bill.
Yeah.
Okay. So let's say on average, my bank account sits around 80 grand a year, sometimes higher, sometimes lower. Okay. So if I've got 80 grand sort of sitting in working capital all year, and maybe I can go and get what, 4% interest on that in a cash management account, then I can make my company an additional $3,200 in interest.
Right.
It's not
Right.
that much,
It still
it,
counts. Yeah.
it still counts for sure, but it's not like in the scheme of a $4 million wage bill,
Mm.
$3,200 is a very immaterial percentage, less than 1%. So
Right.
an Australian business has lost that opportunity to make that small amount of interest. What you see in real terms, though, if I've got $80,000 sitting in this account
Yeah.
and it's set aside for super, but my customer hasn't paid me on time and I've got to pay wages next week and I've got to pay a supply next week,
Yeah.
I'm just going to dip into that $80,000. It's okay. I'm going to put it back the following week, right? So
Yeah.
people have always used this as an overdraft account. Their business, it's like, and that's where people get stuck. Because if it so happens you've had a bad month or you've had a bad quarter, you've spent your $80,000, you get to the end where you got to pay superannuation, you don't have it to pay.
Yep.
Particularly if, yeah. So, like as an accountant, it is more of a cash flow issue, and hopefully I've defined that issue in real terms. That like
Oh, you
yes,
have, yeah.
we're forfeiting $3,200, but the biggest issue is you don't have access to that. If you've been using it as an overdraft facility, you don't have access to that overdraft facility anymore. So Employment Hero, one of our partners our partner that we use their payroll software for our services, they've come up with their analysis where they believe that the working capital impact on an average Australian business is going to be $125,000. And they've worked that out from polling their entire client base and, seeing what average wages are per business and that sort of thing. So that's not to say you need to spend an additional $125,000. That's not what we're saying. But what we are saying is that in that quarter where you're going to end up having to pay, for example, your superannuation on a weekly cadence, as well as pay last quarter, that quarter is going to cost you $125,000. So the biggest thing you can be doing about it between now and then is if you currently pay quarterly, start practicing paying monthly. So I might pay, actually super's due today. We're filming this podcast on the 28th of January.
Yeah.
So um, October to December is due to be paid today. If I had to pay today, what you should be doing is pay today, and in a few days, pay January, just the month of January,
Right.
right? And then pay February, and then pay March. So instead of getting to the end of April and you've got a quarterly bill, now I've got a monthly bill. And maybe once you hit April, instead of waiting to the end of April to pay your month, just pay it every week as you go. So as you're going into that, compliance period
Yeah.
where you have to pay it weekly or fortnightly or whatever the process is, you've handled that slowly and you've smoothed your cash flow out over a 6-month period. But if you wait till the end of the year and you just let it hit that impact on 1 July, it's going to be a hard transition to go from quarterly to weekly.
Yeah, absolutely agree on that. And you know what? The other thing that ATO has stated is that there's a very clear policy. If you miss paying the super after 7 days, then you're liable for the SGC, right? So the super guarantee charge. And
Yeah.
with the visibility that STP Phase 2 gives, I'm pretty sure that ATO they're aware of how much you're paying your employees when you're paying. So I think the liabilities will be really automated from this side. So there's no way for you to escape, right? So if you don't pay, and if you're not ready by July, and if you don't pay, then you're automatically getting blacklisted by them, and that is something that you don't want.
Yeah.
Right?
Yep. Absolutely.
But then
They're
you're
also compounding interest daily on it too now. So, by day 8, you're accruing
yeah.
interest. Yeah.
Yeah, so we have seen that the criminalization of the wage theft come into force last year, right, in 2025. So do you think that thus missing a payday super deadline now technically fall into the realm of wage theft, given it's a strict entitlement delay?
No, I don't. I think
No,
the
right.
criminalisation of wage underpayments was a Fair Work initiative
Right.
and the administration of supers through the Australian Tax Office. So actually under a separate banner for
Okay.
legislation over here. So I don't think it falls under that criminal underpayment system that came in, but unpaid super can result in director penalty notices, and that means that
Right.
the directors of a company can be personally liable for unpaid super.
Okay.
So that is existing within the powers of the ATO. So your super bill is something you want to pay first, not last.
Okay. Got it. Like moving on, like when you consider a business that is running a weekly payroll,
Yeah.
till like currently they have to pay this only four times a year, like you mentioned. But then from July onwards, they'll be processing super 52 times a year. That's basically like a 13 times increase in the administrative frequency, right? And how difficult do you think uh, the life of businesses will be if they're not using a payroll system or a payroll solution that supports the super reforms that are coming up in July.
Yeah. Well, I know for a fact that the only if you're processing payroll manually
Yeah.
or using a system that doesn't support a clearinghouse, the government has a clearinghouse at the moment called the
Right.
Small Business Super Clearinghouse, and they're shutting that down as part of this process. So it is
Right.
going to force um, all payroll software providers out there to offer a clearinghouse facility, and the ones that don't will have to catch up. I think they pretty much all do, all the major ones do. Employment Creator we work with, they've developed their own,
Hmm.
and the reason they developed their own is they wanted to embed not just the payment process, but also all the error handling and all that stuff I mentioned earlier inside the software in real time. So you're not
Right.
dealing separate pieces of software to get that information. Um, so yeah, so as I said, there's an onus on payroll software providers to have a good solution for their clients for
Right.
superannuation. Um, I think it might be a moot point to talk about administration because even though there are 52 payments, if it's designed correctly, it's just going to be part of the pay run finalization process is you're also
Right.
initiating superannuation. That being said, one of the impacts on this is going to be fixing up your workflow when you're onboarding an employee. So
Right.
sometimes I've seen in practice, if you've got paper onboarding, which still happens quite a lot in 2026, surprisingly, people still on board with paper, their new employee. And if I hand them a super choice form to fill in, they might take that home and I'll get that back to you in 3 days, or I'll get that back to you
Yeah.
next week. All of a sudden, you get to your first payday and they haven't returned it, and you're left chasing that employee out. Now, that's okay because I've got 3 months to get that information off the employee and get that right, put in the system. Well, now we don't have that anymore, right? Now we have to make sure that's happening in real time.
Continuous systems. Yeah.
You can't start working for us until you've given us proper super information, should be the policy, right? So
Right.
if I'm a business at the moment, I want to make sure I've got a really, really smooth employee onboarding workflow. Ideally one that the employee fills in themselves electronically and they go and retrieve their superannuation information in real time as they're being onboarded.
Right.
And
And
that's going to be critical to it.
if you look at it from a futuristic perspective with these payday super reforms coming in, do you think it's gonna like businesses are going to slowly move away from the weekly payroll cycle and adopt, say, fortnightly or monthly payroll cycle slowly because then they'll get more leeway to, work with their that super liability and everything. So more
Yeah.
working capital for them, more administrative, like time for them to handle everything out.
If I'm predicting it, I think that first quarter coming up between July and September, I think once people are past that quarter, then they'll be in a cadence where they're used to paying a certain amount of superannuation.
Okay.
So what I could really see happening, instead of people changing their pay cycle, I could actually see people delaying other payments that they can afford to delay. For example,
Okay.
tax withheld on wages. You know,
Hmm.
that for a small business, that's still a quarterly payment or a monthly payment. So they might kick that down the road a little bit because I've got to pay super every week now. And that's where I could probably see, a lot of unpaid bazzers happening around October this year. You know, I should it's not certainly not my recommendation, but I think that's going to be the impact on it where people are tight with cash flow. They're going to delay that. Um, and the government come down hard if you are delayed. So, but yeah, changing the pay cycle from weekly to monthly, um, you have to pay a bigger bill 7 days after you do that
Right.
and a smaller bill every 7 days. It's a slight advantage. Um, but the argument I'd make is, yeah, once they've changed that workflow pattern, you know,
Mm.
the only timing advantage is that $3,000 interest that I spoke to you about. So that's really what you're trying to achieve there. And you're probably pissing off 50 staff are paying them monthly in the process. So I wouldn't recommend it. I'd recommend just keeping a same cadence, weekly or fortnightly or whatever you're doing at the moment. But try it over the next 6 months. Move from quarterly to monthly, then move from monthly to weekly or monthly to fortnightly, and just get used to that pattern slowly over a 6-month period instead of being lumped with it 1 quarter. Yeah.
That makes sense. You know what, God? So just if I just from your seat as an auditor, with
Yeah.
these reforms coming up, you have very less room to make mistakes, right? Like because there's this 7-day period wherein you need to submit all your super liabilities. So what do you have to say to payroll officers who are going to audit, the super calculations, the super details before it is sent off to clearing houses or
Yeah.
the super funds? What suggestions or what tips would you give them so that they are prepared before the July comes?
Well, one thing you wanna do is you wanna audit your existing super fund records and make sure that
Right.
you don't have some employee who's been bouncing back for a past few quarters, because that's gonna start costing you.
Right.
We mentioned the onboarding workflows earlier. You wanna make sure
Yeah.
you've got a paperless onboarding workflow that gives people a qualified list of super funds they can pick from and say, "Here are the ones that you can pay into." I would
Yeah.
enforce that you can't start work until you've submitted your superannuation, onboarding forms as part of that. And you gotta get a little bit tougher on that stuff. So where we've had that 3-month period to chase the employee and get that information off them, we need to make it as easy as possible, but enforce that they provide that information before they start. That's gonna be the biggest win. Make sure you're using a system like Employment Hero that allows, um, staff to log into an app and change their super funds. If people wanna change what super fund they're paying into, they can. They can do that anytime, and we need to give them tools and facilitate that, not running it back to head office. Don't turn off access to those features either. Like, don't be
Right.
protective of those. Like, be trusting that give the employee as much information at hand as possible. Um, if you're running a payroll office where you don't let staff do that, even though the feature exists, try turning it on. You know, so we really got to make this transactional and make it happen in real time. It's not something that we can. Don't worry about it right now. We'll deal with it after payday. You want to deal with these things.
Right.
Um, the other thing that happens in Australia is every now and then there are super funds that close down. One super fund will be bought by another super fund or acquired or merged. And, you know, you want to make sometimes your records get out of date because of that. So again, you want to be working with a system that keeps those live updates working for you in the background so you don't have to manually change those things. So
Right.
there are a few little tips that we've got. Like a system selection is going to be big, onboarding workflows are going to be big, and making the right selection, right? Like enforcing onboarding steps. It's going to be critical. So it's actually as much a function on your HR teams as it is on your payroll.
Absolutely agree with you. So, God, I think that was a very insightful conversation. I mean, the message is loud and clear. July 2026 isn't just a calendar change, it's a total renovation of how money is going to be moved in Australia. I mean, and for businesses that are still using the manual uploads and spreadsheets, I think it's the clock is ticking on them. And once again, thanks for showing us where the landmines are before we step on them for the Payday Super reforms that are coming up.
Terrific. I appreciate it.